you're looking at knocking off 30 grand of expense line right out of the gate by not having an on-site manager that lives there or works there full time.
Hi, welcome to the Self-Storage Insight podcast. In today's episode, I speak with Terry Morrison, and he tells us how he uses a third-party management company to fuel the growth of his business. Hi, and welcome to another episode of the Self-Storage Insight podcast. I'm Ben Shirey. Today, I'm joined by Terry Morrison. Terry is the managing member of Equanimity Capital Partners. And so, Terry, excited to have you on the show today. Excited to talk to you about your experience with self-storage and kind of, get some of your insights on the industry. Do you mind giving us a few minutes of a little backstory? How did you get into the industry?
Yeah, sure, Ben. Again, thanks for the invitation. Glad to be on the podcast with you. A little bit of background on how I got into business. Really, I was looking for diversification, investment diversification, and
Okay.
I really liked the self-storage business model. I'd read a little bit about it, and it piqued my interest. And so that's kind of how I got started in it. My previous background, I was in enterprise software sales, and then I transitioned over, into this space full time. But initially, I started out in real estate just as a single family home investor. I had about anywhere between 15 and 20 of the single family homes, and then was looking for, again, just more diversification, not only outside of your typical 401ks and ESPP stock plans, which is where a lot of my money had been over the years, but I moved some of that into single family homes. But I also wanted more diversification, and that's why I looked at self-storage. I think, when you say why self-storage, I mean, my perspective on it, Ben, was I looked at it as a very solid investment asset class in both up and down markets from what I had read about it. Also, it was a lot less complex asset to manage and maintain, say maybe than multifamily or even single family. And another thing that really caught my eye was I really like the landlord-tenant lien laws. They highly favor the landlord. They're completely different than some of the other asset classes. So I thought that was cool. I think also the revenue risk involved in the model. When I talk about the model, I really liked it. You've got hundreds of tenants. If two or three or four of them don't pay, it's really unnoticeable. Whereas in other models, if somebody doesn't pay, it can be a big impact depending on how big of a client they were in your business. So I like that.
Sure.
And the other thing too is that most facilities could be managed remotely and with technology. And I kind of like that. I come from the tech space, and I thought that was a good model, and it was a cost saving model as well. So I've been in the business about 3 years. My group has about 12 facilities that we operate and manage currently, and we do a lot of construction and expansion on those. And I think that those 12 facilities comprise of about 3,000 net rentable 3,000 units and about 400,000 net rentable square feet of space, and that those 12 units are across 5 different states.
Okay. And so as far as acquiring those 12 different facilities, did you buy them already built and then expand on them, or did you buy land and completely develop it, or kind of what was your approach there?
Yeah, the way we looked at it, when we started buying, Ben, the market was incredibly hot, right? It was 20, 21, 22. And so, prices were sky high. There was a lot of competition. Everybody was looking to get into the space. There was a lot of money chasing these properties. So, we looked for properties that, we could expand or we could convert, meaning a warehouse that we could convert into self-storage.
Okay.
And the reason we like that model is it had, there are other levers, obviously, that you can pull in trying to improve a property to increase your NOI. I mean, you can raise rates, you can cut your expense line, you can sell tenant insurance, you can pull on those levers, but we wanted a little bit more than that. So we looked at the expansion conversion model, and that was the type of facility we looked at. So to answer your question, we would usually buy facilities that had some ongoing business. They had 10, 15, 20,000 square foot of space already. And then we would look for that additional land that was, with those or warehouses that were with those facilities that we could then go in and expand and construct on. So that's how we approach it.
Oh, nice. And so you mentioned, yeah, buying warehouses and things like that. Do you, when you buy, say, a warehouse and convert it to storage, are you normally looking to create a climate controlled space? Do you what is kind of the goal there? Do you normally end up trying to get to a climate controlled space, or what's your preference?
Yeah, I mean, usually climate control makes the most sense because usually those buildings already have some form of insulation and, HVAC heaters and all that kind of stuff in them. So you try to capitalize on that. You could make them non-climate if you wanted, but we typically looked at just converting them to climate control. We put the fix up the floor, fix up the facility a little bit on the outside. If it needed it, basically design out our unit mix and layout and have that built on the interior, and then add the HVAC component to it and electrical if needed. And
Right.
yeah, that was the way we approached it. But yes, it was typically climate control.
Okay. And then as you're building those facilities out, do you have like a specific builder or a specific building group that you like to work with in those cases, or do you kind of just go off of recommendations depending on what area you're in, or how do you decide how you're going to expand the buildings?
Well, we definitely like building partnerships with groups that we work with, and we find that you can get a lot of synergy doing that.
Mhm.
Um, and now, if you're buying in a bunch of different locations, it's sometimes you have to jump around a little bit because it's harder to do that. But wherever possible, we try to, develop relationships and partner with people in different areas to kind of create that teamwork effect.
Mhm.
Um, so, we would. We would work with if in an area, we'd find general contractors, obviously, that and civil engineers and architects and bankers, the whole plethora of people you have to work with. And if
Right.
we could rework with those guys on the next deal because it was in that local area or something, yeah, we would certainly do that, and we prefer to do that because it just made sense. Sometimes, if the next facility we bought was just too far away or it wasn't considered in that local region, then we would go to different partners to work with them.
Okay. Yeah, I know. I do hear those kind of questions a lot too, as far as even from people in my locality that are looking to grow and expand, and they're nervous about getting outside of our area where they don't know
Yeah.
any of the contractors. And so then they don't know the banks that are in the other area. So, there's always that unknown factor of expanding outside of your region. That
Well, really what you have to do, Ben, is you've just got to tell people what you're trying to do, right? You got to explain to them what your goals and your business model looks like and what you're trying to achieve. And, you just look for a partnership. Are they a good fit for working with you? And
Right.
yeah, you have to go through, I mean, if you haven't worked with them before, you absolutely have to go through the process of, interviewing and talking to them and trying to build that relationship. And then, if it's a fit, you can move on with them. But if it's not, you go talk to other people. So sometimes you definitely have to do that, but you also rely heavily on others in the industry that you might know that can give you referrals too. So, you
Okay.
don't just start Googling names. I mean, you can't do it that way, but a lot of times we would rely on other people that we knew that might be somebody like Coppers, say storage, right? The storage management that we work with, they could refer people to us and so forth. So it's always good to ask for, and it's weird because sometimes you might be talking to your attorney, right? Your lawyer, and believe it or not, they can give you referrals. Like, hey, do you know
Right.
anybody? And you ask those questions. So you should ask that when you're talking to anybody in the industry, and it helps you build out that team, so to speak, if you're going to areas that you may not have those contacts.
Right. One other thing too that I think is important is, networking. If you go to some of the trade shows, or, if you join the local association or the state association at whatever level you would be at, a lot of times they would have recommendations as well on, people even outside of their state. So
Well,
having those association connections helps a little bit there too.
absolutely. And you know what? We do that. We absolutely do what you just said. We go to ISS in Vegas. There's a couple of trade shows a year in Las Vegas. We go to those. We go to other, the local, like I belong to the local storage uh, um, group here where I'm at. My partner in his state, he does that too. So you're spot on. That's exactly what you should do because you can get we've gotten a ton of contacts. We've even went to multifamily events, right? I mean, even though they're multifamily, still you're dealing with a lot of people that overlap or can overlap. And there's a lot of networking that goes on there. So we've done it all those ways.
Okay. Awesome. Yeah. Great information. Yeah. I want to go back to something you said a little bit earlier when you said about starting to invest in self-storage and how most of it could be fully automated or remotely managed. And then you'd mentioned that you work with copper storage management. What is a feature? What is something that has benefited you from using a third-party management service that has helped you grow your business?
Yeah. Well, I mean, when you think about what it takes to manage a self-storage facility, um, there's a lot of moving parts and a lot of things that need to go on. And then if you start saying, well, I've got 12 of them now, I mean, that's a massive lift, right? That's a heavy lift to do. So, we looked at that when were first starting. We said, oh, there's no way we're going to have the bandwidth or the expertise to do this on our own. So we were looking for that type of a partner, and Copper fit that bill perfectly for us. And when you think about it, you've got your digital. I mean, when you ask what do we rely on Copper for? I mean, pretty much everything, right?
Okay.
They are a very strategic partner for us. They run all the digital part of our business, the website, the click ads, the SEO, all of our promotions. They implement dynamic pricing, on the website. They drive our tenant insurance income. They manage our auctions. When you have a person doesn't pay, you got to kick them
Right.
out. You auction their stuff off. They do our site repairs. Something, door might break, a gate might break, the light needs to be replaced, things like that. That property management, they deal with that for us. They take care of all of our on-site, kind of promotional signage like flags and banners and things like that. And then one of the other things that they provide that I find very useful for our management team is they use a product called Monday.com for project management. So all those things that we have to manage and deal with that we're involved with as owners, we work with them on that project management platform to manage those tasks, right? So there's always a list of them. And like I said, when you've got 12 properties, that list can get very long
Right.
because there's properties. So back to your question, those are the things that they do for us. And quite frankly, if you think about it, if you were that owner and you were trying to take all of that upon yourself and you were trying to do that across multiple properties, that would be incredibly burdensome. You spend all of your time doing that. Now that's if you may want to do that, but if you want to scale and get outside of one property, and then the other thing, your properties would all have to be very closely located if you were going to
Right.
be doing that. If they start getting spread out a couple states apart, 5 hours apart, it makes that model even harder. Where that's what Copper does. They're able to manage it remotely for us, and allow us to scale, and they do a great job.
Right. And that's big too, even as if you think about the overhead of hiring managers to manage the facility, if you don't have something like that, training employees or having the payroll overhead and all of that with your facilities.
Well,
Yeah.
yeah, I mean, Ben, I would say that, just financially, the number one reason, if you said, how does that benefit our business? You're looking at knocking off 30 grand of expense line right out of the gate, by not having an on-site manager that lives there or works there full time.
Right.
So it's not that those functions still have to be taken care of, and there's a little bit of cost associated with it, but nothing like paying somebody full time.
Yeah. And it seems like as far as even with scale, it helps you have the freedom to kind of look for opportunities for investments, on a much bigger scale versus,
Yeah.
trying to grow location by location. Yeah. And spread out from an area.
Well,
You can kind of,
my partners at Equanimity Capital Partners, it just allows us as asset managers to spend our time doing other things, right? Finding new deals, um, getting a property ready for sale, just you know, dealing with all of our investors and our banking relationships, and just all the things you have to do as asset managers. So we can focus on that. We don't have to deal with the day-to-day operation of the
right.
facility.
Yeah. Yeah. And then you can just focus, yeah, growing the business and let them take care of the management part. That's awesome. Yeah.
Exactly.
So to just kind of shift gears a little bit, I guess, what would you say would be your biggest challenge as far as starting out with investing in self-storage?
If I were, I guess, to give somebody advice on that, and kind of how it pertained to me personally, when we started buying in this space, late 2020, right?
Okay.
That was, like I said, that if you have any historical knowledge about this space, prices were strong and climbing, and there was a lot of competition out there. There were a lot of investors all vying and trying to buy the same properties. The prices were sky high. So, what we tried to do, that was a challenge. I mean, that was really probably one of our biggest challenges was how do you find a fairly priced property that you're not overpaying for, that you can make the numbers work out on in that type of environment. I would say that was the biggest challenge that we had, right?
Okay.
And that was the game. I mean, you're out there grinding through deals, talking to people. You'd go after some, you'd lose some, you lose a lot, right? I mean, we
Okay.
lost a lot of deals just because there are a lot of other people outbidding us, or that we weren't willing to pay as high of a cap rate as somebody else was paying. So that to me was probably the biggest challenge.
Okay. Now, do you feel like that your real estate background or having some other real estate properties, like already having a little bit of knowledge on that, helped with that transition or starting to invest in that, or no?
Yeah, absolutely. I mean, I had been in the single family space for, I don't know, a dozen years, and had quite a few properties in that space. And so sure, that helped, right? And also, I was in my previous career, I was an enterprise sales software sales rep, and so I had to deal with a lot of contracts and all that kind of stuff. And there's a little bit of a overlap there for what we were doing when we were acquiring properties, and going through that whole acquisition phase of getting self storage properties under our belt. And I kind of helped our team and ran point on a lot of that. And so a lot of that past experience dealing with legal and contracts and
Right.
so on and so forth, it certainly helped. Yes.
Okay. What is your take on, seeing again, every time I look up what's trending in self-storage or what's going on, it seems like there's just more and more REITs and, investment trusts and things getting into this industry now. How do you feel that plays into getting started out if you're just a
Yeah.
single person looking to invest in self-storage, feeling like you're going up against all these investment trusts and things that are putting pressure on the market?
Sure. Well, if you look at the market, it's still a very fragmented market, right? I think it's like 65-35, somewhere in that range, meaning 35% of it's institutionalized, the REITs, the bigger players, the bigger investors, and 65% is just still fragmented into individual owners and very small, as they call mom and pop type owners. And so there's a lot of upside potential in that market because it's not fully controlled by the REITs. But in my opinion, the REITs and other larger investors being involved in this space validates the space. They wouldn't be putting money into it and chasing this space if the business model wasn't sound and it wasn't a good space to be in. So to me, there's a little bit of a silver lining in that. Now, there are a lot of places. I mean, self-storage has been around a long time, since the 70s, right? And
Yeah.
it's all country. And REITs usually like to play in the bigger spaces, the bigger MSA markets. And for people that are just starting out, you don't have to go compete with the REITs. Go to a tier 4, 5, or 6 market, a smaller town that's got 15, 20,000 people in it, and buy a facility there, right? Or some place where it's affordable for you that meets what you're trying to accomplish or what you can do. So I kind of view that as a positive. Another thing about REITs too is they do, with their knowledge, market presence, all the things that they bring to the table, they do kind of drive rates in the industry, right? They drive the rental rates and where they go. So, that kind of trickles through the market and helps, I think, impact things in a positive way. If you're on the owner side, right, you want rates to be higher, obviously,
Right.
to increase your revenue. So I don't view REITs as being bad. I just think you have to, again, be smart about where you buy and make sure you're competing in a market that fits you.
Yeah, that's very, very good advice. Yeah, thank you. This episode of the Self Storage Insight podcast is brought to you by CC Storage. CC Storage is a property management software that enables you to pass card processing fees onto your customers, immediately impacting your business's bottom line. If you're looking for all the convenience of processing cards without the cost, then CC Storage may be perfect for you. Go to ccstorage.com to learn more. Now, back to the episode. Do you have any horror stories as far as from the investment side? Anything that you remember specifically that, went really bad or that you would share, or
Um,
nothing that comes to mind?
no, I mean, I wouldn't say. Let me think. I wouldn't call it a horror story, but maybe just kind of lessons learned kind of an adventure would be a better way to put it. We found this great property that we thought, man, this is going to be awesome. And we're going to go, it was going to be one of the ones that we did a little bit more development. And it was a 16-acre property, I believe, somewhere in that range. And we were going to, expand it, put climate control on it, some covered RV parking, enclosed parking, enclosed RV. Great location, everything about it looked fantastic, right? So we engaged the lawyers and the civil engineers and the feasibility study folks, and we got going on this thing, and everything still looked great. And we were, quite a ways into the due diligence period. We were under contract in the due diligence period, and then our civil engineer, late in the process, discovered what could be a wetlands issue. And as we learned later on the initial maps and everything that they were looking at, it wasn't there, because I guess some laws had been changed in the local areas, some cockamamie story like that. And so now it was applying where it didn't before, these wetland rules. And lo and behold, we discovered that 75% of the property that we were looking to buy was impacted by wetlands and setbacks, and that we couldn't use the land. And that was just a deal killer. 75% of what you're going to buy just out the window. We didn't have enough room to expand, do anything we wanted to, and we were well into that. So we had to walk away from that deal during the due diligence period, and we still lost $30,000 in the process, because we had to pay the lawyers and the engineers and all the stuff that we invested in. But that's part of the game. That's what you do. But that was a little bit of a downer, because it looked so promising. And then we got blindsided late in the process, by this wetlands issue that nobody saw. So,
right. Well, I mean, that's also why the due diligence process is so important, right? Yeah. You could have lost way more than that had it been discovered later.
Now, we've had due diligence processes where we've walked away from properties where we did discover things real early on. And to your point, that's the purpose of the due diligence process, is to find those things that maybe you didn't like about the property, didn't know about the property, it doesn't fit what you're trying to do, and then you make those decisions. And we've had to walk away from a few deals in that regard, where it was early in the process, so we didn't feel that financial pain.
Right. That's awesome though. Yeah, good story. And it also brings awareness to kind of some of the things that can come up as you're getting into the investment side of it. So that's
well, and one thing I would suggest to people that are trying to get into the space, that might be new to the space, number one, don't try to do everything yourself. As we've talked about before, find strategic partners like, Copper Storage Management and others, whether it's bankers or real estate agents or contractors that you're working with, whatever you're doing, look for that team. That certainly helps, as opposed to trying to go it alone. But one of the other, I think, big things I would recommend to people that are trying to get into self-storage space, or they want to venture into this area, would be take the time to educate yourself, right? And I'm talking about not just, at the surface level, but really you got to dig into it, right? You've got to get a deeper education, understanding of what the space is all about, what you're getting yourself into. You need to read a lot. You need to go to webinars. You need to go to in-person conferences. Those ones I talked about in Las Vegas, and they're, the local, chapters of your storage groups. Join them, and network, and just really educate yourself. If you do that, I think you're going to be, much better off, and you won't have as many false starts, or you won't have as much risk. There's always risk, but you certainly can reduce it. And then I think, along with that, you have to understand why you're wanting to get into it. What are your personal goals? What are your financial goals? What are you really trying to accomplish? And does the self-storage space match up to what you're trying to do? And I think if those are congruent, it all lines up, then you've got to win, and you can move forward. But I just think you need to understand that and the space before you jump in. I think if you do that, you'll be a lot better off for it.
Well, that's an awesome piece of advice. And that went to my next question. I was going to ask is what would one piece of advice be that you'd be interested in giving to somebody looking to start out? So that was awesome. Yeah. Very, very good information. And thank you very much for being on the podcast with me today. Really enjoyed talking with you. And that's awesome.
Yeah. And happy to join, Ben. And, if people want to learn more about us, they can go out to we have a website, equanimitycapitalpartners.com. We've got information on our website. My partner, Chris, wrote a really good white paper on the self-storage space that I would encourage people. That would be a good education piece for people to read. You can follow me and Chris Cashman and Terry Morrison on LinkedIn. We post a lot of educational information out on LinkedIn on a weekly basis. So you can follow us there as well.
Yeah, but very, very good information that you gave. I appreciated you taking a couple minutes to talk to us today. And yeah, really enjoyed having you on the show.
All right. Thanks, Ben. Appreciate it.
This podcast episode was brought to you by CC Storage. CC Storage is a property management software that helps you pass the fees of credit card processing onto your customers so you don't pay credit card processing fees ever again. If you enjoyed the podcast, there's a link below where you can fill out a form and be interviewed on the podcast with myself. If that interests you, please click the link below and we'll be in touch. We hope you enjoyed this podcast episode. Don't forget to check back next week for another interview with another self-storage property owner.